Welcome, everyone. Welcome to the Hurley Investments Market View commentary for Monday. It's actually Tuesday the 18th. Glad to be here with you. I have a couple different things, but I'm going to tread lightly. That's what I'm going to say. Right now, I'm just going to tread lightly on a couple things. It is political, but I think this is in a good set of mind. That doesn't make sense. I think I'm trying to do this with the proper set of mind and not to prove a point, because this goes to both political parties, but I think it definitely affects our market. So I'm just going to ask you guys a question out of the gates. What was your thoughts when Musk took over Twitter? And I'm going to share mine with you as you think about that and type it in. My first thought out of the gates was he way overpaid for I'm going to call it political stunt. But it wasn't necessarily political. It was just a rich dude trying to prove a point because it pissed him off. I thought he way overpaid for the valuation of it. But that was my first thought when he took over Twitter. I just was like, dude, you're an idiot. You can't work the numbers. You don't understand what's going on. Then I thought for sure it was going under. No questions asked. I'm like, it's going under. What an idiot. He just wasted $46 billion. Shocked when he let go of 80% of the workforce. Mathematically, there's no way possible that you should be letting go of 80%. In fact, most time, if you let go more than 15%, it basically means the business is going out of business. Yet then, when it posted a profitable quarter, I finally realized he knows what he is doing. Would anyone like to make a comment on Musk taking over Twitter and turning it into X? I am leading this somewhere. I wouldn't invest in X. No, that's an interesting comment. So would you now invest in X? No, I wouldn't. It is coming back with some pretty good advertisers, and it probably will surpass what it was before. It'll probably make more money than it did before. But I didn't invest in Twitter in the past. I obviously am not looking to invest in X in the future, but I am looking at it. A fair comment would be to say, yes, I am looking at it. Okay. And someone just typed something in here. I thought it was not a financial investment, rather a political one. Yeah, so someone else agrees with me. They're on the same page. Okay, so here's where I'm going with this. Today, I saw an Instagram or Facebook reel that showed something in the range of 4.7 trillion wasted government dollars. And I spent today looking over this on trying to verify what this is or what this came from, where it's at. I did not find it. I could not verify everything that I saw. I did come up, and I've attached it as a handout. I did come up with, I think this is Rand Paul's Festus report of 2024, and it's 41 pages of government waste. And I'll be 100% honest with you. As I go through this, you see tens of thousands of dollars and tens of millions of dollars, but I couldn't come up with 4 trillion in waste. And if you know Musk and Doge right now, what is the biggest concern? What is the biggest concern with Musk and Doge going through all of these government agencies? A very interesting comment. I'm not gonna name names here, but I agree 100%. I don't use either, so I don't follow it. If anyone can now find fraud, go for it. Why should it even be political? How much is wasted? Who knows? I can't believe the numbers they're posting on social media. I don't trust the media either at all right now. I've always got to go back and redo it and refind it. I've got to prove it to myself. And I think I said that to you guys for years, for at least a decade, right? Just because you read someone else's work on Seeking Alpha, on Yahoo Finance, Google Finance, all these sites that are out there, and obviously there are tons of sites out there, whether it's going to be CNBC, I think I said Seeking Alpha, Apple News, X, I mean, whatever you're looking at, you have to verify those numbers, and you have to do it yourself. I've told you for years, don't read it and believe it. You got to work it. You've got to work those numbers yourself to justify the numbers, to justify the article. If you can't do that, then it's a waste of your time. But getting back to my question, what is the biggest concern I'm going to say for Musk and Doge right now? And I think it's pretty simple. So a comment was just made, how do you get access to real numbers? Well, back when it was in stocks, I'd go to multiple sources to find EBITDA numbers and so forth. And the government, you go to the government sites and their budget numbers, or you find multiple people that have done the research in I'm blanking on the department that audits these government agencies, and you just find where those real numbers are hidden and see if you agree with it. But more importantly, what's the biggest concern for Musk and Doge right now? It's in every, thank you. The Office of Government Accountability. That's the office. That's exactly where it's at, where they have their audits right there. Thank you, thank you, thank you. There should not be sacred cows. Trust but verify is needed. Right, trust but verify, 100%. Okay, there you go, Mary. Thank you. The biggest concern for Musk and Doge right now is that they will get our personal information. Social security numbers, tax returns, all that kind of stuff. And I read that in every single article that I see. So let me ask this group a quick question. Answer yes or no. Don't you feel like the federal government already has all of our personal information? Don't we send in all of our personal information, where we live, our birth dates, our social security number, on our taxes? Don't we give all the personal information out to the government when we sign up for a job and fill out a 1099? Do we really not think that the federal government can't find every personal part of our information very easily? They do background checks. They have our criminal records, our birth certificates. Personally, I do think it's kind of funny. The government already has all of our personal information or access to it. It doesn't matter. It will never matter. But I also think that maybe, for me, I don't have much to hide. In fact, I'm kind of a jerk. The last time the IRS audited me, I make sure I've got the first couple months some extra write-offs, and it's not a lot. It's hundreds of dollars here and there. But the last time I had an IRS audit, I was like, hey, here's this receipt. Can I write that off? Guy was like, yeah, you can. Oh, thank you. Hey, let's go through. Oh, I've got this receipt. Isn't that fall under here and I can write it off? In an hour, I had found $1,200 or something. And I was like, man, you are awesome. Who is your boss? I'm going to let the IRS know I've got an agent that's doing my audit that's finding me more tax write-offs. You guys are awesome. Who do I tell? And he was so pissed off, he left in about an hour and a half, hour and 40 minutes. I'm not hiding. Crap. So I guess it doesn't matter to me. But what I do think it'll do, I do wonder what economy, what stock market, what defense, what education, we would have without the debt hanging over our heads. I'm not saying I've got it all figured out. I don't. I truly do not have this all figured out. It's almost like we're going through a movie. I tell you, when we find out companies that are fraudulent, that are overspending money, that are wasting corporate money that could be for increasing the stock price. when companies make stupid decisions, they're held accountable. They go out of business. We sell their stock. We don't trust them anymore. We'd want to know if it was a company we were going to invest in. I'm not sure what to believe, but I do like upsetting the apple cart. And if we could find $4.7 trillion of wasteful spending, that's a lot of pork that's been in bills, I'm sure, for years. That'd be more than 10% paying down the debt that we're currently in at like 38 trillion or something like that. I think I'm okay with that. I don't think that's going to bother me. Next question. Our last correction, which was a bear market correction, was, I want to say March 2020. Here's my question to the group. I'm curious to know what you think. When will we have our next correction? Will it be in the next 30 days? And it's going to be in the next 3 months. And it's going to be in the next 6 months. And it's going to be in the next 12 months. Or do you think it's going to be more than a year away? What do you think? Will our next correction be in the next 30 days? Will it be in the next 3 months? A new window should have opened up where you get to click on it and take your own guess there. Will it be in the next 6 months, the next 12 months? Or are we more than a year away? I'm going to give you guys about 10 more seconds to make your best pick. Next month, next 3 months, next 6 months, next 12 months, are more than a year away. So here we go. 5, 4, there's still 25% of you that haven't voted, I believe. 3, 2, 1. All righty. As we take a look at things, 17% said the next month, 33% said the next 6 months. And when I first thought about it, that's kind of where I placed my vote. But then as I was preparing for tonight over the last week, I pushed it more towards more than a year away. And I'm going to give an example of why. To be honest with you, I don't know. No one knows, right? My vote would be more than a year away. And the reasons behind it, they're pretty simple reasons. Sorry. You guys are like, hey, I can't see what's going on. They are pretty simple reasons. Trying to make sure you guys are able to see audience view. There you go. They are pretty simple reasons. First one, it comes down to earnings. Earnings were phenomenal for this quarter. They were supposed to be really bad. We're talking low single-digit earnings. Yet we were 18% surprise versus like a 4.3 or 3.4. I think it was actually a 3.4. Earnings expectations were blown away. less government regulation. And I would prefer less government regulation, but I also would prefer stiffer government penalties. If you're going to have less government regulation and free market run, I do think stiffer government penalties are needed. The stiffer the government penalty, the better when someone takes advantage of less regulations. And the last thing is people are just looking for change. Change from what? Inflation. I think we want to see less inflation. I think we want to see cheaper gas prices. I think we want to see higher paying jobs. I think we want to see less of the last 4 years of government. And I hope you understand that when I say that, there's still 70 million people that voted for the last 4 years of government. It's really interesting. I had a friend that reached out to me. He is an LGBTQ lover. He's a DEI. It should always be that way. And it was interesting because as we argued, we actually thought very much alike. Well, Kevin, how is that possible that someone that's a DEI person and votes for that you guys can be a lot alike? He didn't necessarily want it and mean that he wanted it in the workforce. He wanted it in how we treat people in general. He is very, very gay pride orientated. And all he really wants is to get back to people being nice. And he wants it though in the workforce. And I thought about it because as we've seen some of that in the workforce, we went through COVID, working from home. Actually, we went from jobs where maybe the jobs work sites were not favorable with everyone there, to COVID, to partial, to trying to get back together. And I found it very interesting that companies right now are not sure how to manage their workforces. When we're looking at how their earnings have increased, then you're looking at the earning spectrum not having the same volume to increase into the future. And if you've gone through earnings, the last three cycles or earning cycles, revenue is increasing, but margin is shrinking. So when revenue increases, but margin shrinks, that is prime time for that correction. So here I've just given you two sides of the coin on, is the correction going to happen the next 30 days? Probably not. Have I given you reasons for earnings, less government regulation, change for the future? Yes. But our numbers are showing in some way, shape, or form the margins are less and less, which means the companies are less profitable, and we do have a correction in the near future. And the worst part about it, we don't have the timing for it. There is no timing that we're able to put into this that makes any sense. It's just not there. As I've been working numbers, it's been really difficult because it's just not there. Earnings this week, Baidu and Baba. Baidu had its earnings, beat top line. Revenue is not there, but it was growing in all the right areas. I think it's time that we're going to exit Baidu. We don't have the growth controllers there that justify in the next 12 months to be in the position. It's just not there. And actually, Maud, I'm seeing all your stuff just come in. Why was Baidu downgraded? It's downgraded because, and I have the article for you. It was downgraded because of areas that it missed in. Margins. It's becoming less profitable as it makes more money. The cloud grows, but the Google side, their clicks, the spending of businesses have been decreasing year over year. Their net revenue has been decreasing, even though expenses have been coming down and they've been growing in the AI world. This is what's happening. This is why I went through, and I know some of you were like, oh, Kevin, you're talking political crap. This is the problem with businesses in general. Google right now is in the same shape. If it beats on revenue, then it can't beat on earnings per share because it has to jigger it. If it beats on earnings per share, it's not beating on revenue. Profit margins are not there. Companies are making more money, but making less profit, which is why Apple actually took off. It was one of very few companies that increased its profit margin. Well, Kevin, it only increased it by like 0.2%. Okay, I understand it was on only 0.2%. But that was an extra $400 million of profit. 0.2% when you're making over $206 billion was $400 million. That's where our increase in our focus is going to be. Where can we find those companies that allow us to still see growth in their profit margins? That's going to be the killer. That's why Disney went down. Is Disney cleaning house so that's all behind them? It looked like it. It has been. But the fact that their profit margins were down makes me look at it differently. Very interesting article on the big picture. Earnings are on the bedrock where the market stands. This is very deceptive. Yes, earnings drive the market. The more they make, the richer they're becoming, their valuation goes higher. The problem again, though, is the profit. Does it make sense to keep having all these earnings if we were less profitable? Who wants to work harder to make less overall money? Well, will it down the road matter? Well, will the gains catch up down the road? That's interesting. It'll probably catch up with tax cuts. The company's profit margin will increase because of tax cuts. It will not increase because of what the company is doing. It will not increase with the spending that they're doing. Will not increase with the research and development. It won't increase with sales. It won't increase with streamlining. That is our problem. If we're going to make more money, we got to make more profit with it. The best company that showed that was Apple in the last quarter. Okay, where will our market stand? I'm going to go with lower again. The Dow, we're technically bullish. We're building a base. If you take a look at our chart here, it's a little hard to see, but we're coming to a point. It could be a pendant looking at this right here, which means we have a breakout one way or the other. If I was looking at a breakout, it would probably be to the downside short term, not a correction of 3 to 7%, just something towards the downside to test the 50-day. Looking at the S&P 500, it's just at the top of its range. It could not be more than the top of the range. It is definitely range bound for the last 3 months. Where will the growth come in the next 3 months, the next quarter? Well, it's probably going to be from retail. It's probably going to be from technology. It won't be from the cycles because people don't have money. We don't have tax breaks. It won't be the industrials because there's not that growth and profit margins in companies to grow and to build. It's really a confusing time where our economy is going to find growth right now. And so, yes, that's a good point. So could I see us going sideways for the next 3 months? Yes, most definitely. That's exactly where I would see us going, except for the NASDAQ. The NASDAQ turned bullish. And there are some of these Mag 7 stocks, definitely wasn't Meta today, but that have some good upside opportunity in the near future. Look at how range bound we've had the NASDAQ. We just recently got the breakout last week, and if you want to pen it right there, it's to the upside. This is the only index right now that shows a breakout happening into the future. That's why we stayed with some of our positions. Yes, NVIDIA is very difficult to read, so we're getting called out of the stock with a covered call credit and moving to more of those leap bull calls, the stock replacement strategy, so that we already have protection built into the trade. February, probably still down 1%. Earnings, we obviously had a holiday on Monday, so it's a shortened week. We had Baidu today, Toll Brothers, Devon Energy, Bumblebee, VMI Group, Floor, Cheniere on Wednesday, Garmin, Wingstop, CF companies, that's a big one. IMAX is coming out. There's another big one. We're starting to get our movies coming up in the next couple weeks. LNG or natural gas. Hasbro, Shake Shack, Walmart will be one to pay attention on Thursday. BABA for us, Block, which is XYZ company. We have pretty muted economic reports. Empire Manufacturing was higher than expected. That's rather unusual for a January. NAB housing market fell from 42 down to 42 from 47. That's not good. Housing starts and building permits will come up on Wednesday with FOMC minutes. Definitely you're going to see some volatility on Wednesday as we're trying to understand the dot pattern of the federal government, of the Federal Open Market Committee when it comes to rate cuts. Spend some time, if you're looking at what's going on in the world, spend some time going through those minutes so you can acclimate yourself to where you think the government will go when it comes to cutting rates. We know our president's like, cut. I also think we should be cutting, but if we cut, we probably can't see the tax cuts. So you've got to pick your poison, right? Do you want cheaper taxes? Do you want cheaper interest rates? You can't have both if you want inflation to be coming down. That just, mathematically, that just doesn't happen. Thursday, leading indicators will be important. Friday, existing home sales, Michigan sentiment. I have quite a bit of just stuff as I looked at it last week. A very interesting article on DeepSeek artificial intelligence and how we have to rethink the Chinese companies, the ADRs, the companies that maybe are too cheaply valued in China. Kevin, I thought you said you were just going to get out of Baidu. I think you can be too cheaply valued, but if you're out of favor with the federal government, that doesn't make sense. If you're out of favor with the market and you have the uncertainty of the federal government, it doesn't matter how cheap you are, you're probably not going to move. So, interesting article, something for you to read for yourselves. Yes, there are a lot of companies that are undervalued right now, and I think China will probably remain undervalued for the next 4 years. How Elon Musk Doge took over the education department. I found this interesting, so I'm just giving you information. If I was president, I would be cutting to the core. I do think the federal government needs a reset. I do not have the numbers to justify it. So I am talking on that as a personal opinion, but I do have a lot of numbers that say we're definitely overspending. I would love to see all government agencies chopped to pieces and that we start to stick to a budget. Not necessarily education. I'm not picking on any one area. I really wish they'd do with securities and exchange departments in the state level. Chinese tech giant to release its earnings 5.0. If you believe in Baidu, here's a great article that justifies how much growth they could have. But again, when you're out of favor, you're out of favor. There's no changing that. Here's the fourth quarter earnings. It's just the numbers for you to look through. Here's what happened after Elon Musk cut 80% of X. Again, I'll be honest with you. I was very impressed where the company ended up. Your choice to make your own decision on it. Very interesting article. Stuck stock market is worried about economic growth as Trump's tariffs dominate headlines. Again, we've been through this, and tariffs should not be affecting. They didn't affect it the first time, and you mathematically can go through and prove, yes, it makes some things more expensive that come from overseas, but it also strengthens the national companies. Does it mean that we're going to buy more avocados and oranges from California? Maybe. But it doesn't mean that it's higher taxes on everybody, because not all of us are driving around those electronic cars. It's segment orientated. So I'm putting this out there because I'm letting you guys make the decision for yourselves based off of the numbers, what you think will happen in regards to the tariffs. I do like the Magnificent Seven chart, where last year, here's a perfect example of where they made up like 85% of the, sorry, that's 2023, where they made up like 85% of the earnings and growth in the S&P 500. They were a lot less. They were only about half of the S&P growth last year. So I found interesting articles. I was looking at why I'm still investing in the better of the Magnificent Sevens, and I wanted to give you that information as well. We talked about JEPI and moving more people into JEPI. I found one more article that came out last Monday afternoon that I hadn't read through it and gone through the numbers to see if I believed in what was written. I've had a week to do it, so it's a very interesting article that we're going to start to stick more money into a 7.7% dividend payer that still has between a 5 to 12% upside growth. All right, with that said, questions. I know this kind of was probably a testy, more political orientated commentary. I want to apologize, but I'm not going to apologize because it's going to affect us moving into the future. As a quick recap, companies are making more money. They're growing like never before, but they're not as profitable. They're working harder to make less real profit, which is a problem in future earnings or growth rates, which what sets up those market corrections or crashes. We look at market corrections and crashes as part of the market. We look at fraudulent companies or companies that are doing funky accounting as a problem in the market. We also have to look at that now in the government, and we're going to fight this most likely for this whole next year. So it's like we've got double duty on our stock market to view the government as one entity and the market as a second entity, and to see where we're going to come up with ways to find that happy medium. Whether or not we like it, politics affects the market. Nothing we can do about it except live with it and digest it. Right. Well, live with it, digest it, find out if we're going to get tax breaks. I mean, in all honesty, the worry in the government right now, for me, is I feel like I need to sell my house. I've got a huge store of value in my home. I want to take advantage of the $500,000 married couple tax credits. I feel that tax credit will probably disappear. So I'd hate to be sitting on my hands and get taxed on an extra $500,000. I was lucky. I got in at an amazing time in 2009 in an amazing area. There's a huge store of value in my home that if I don't access it quickly, not only will the home prices take it away, but I'm going to be taxed on, possibly $500,000 of that profit when that tax credit gets taken away as well. So it's personal for me. I'm looking at things. I've got to build after Jared's accident. I've got to really build up my IRA. I'm coming to that point where money was borrowed from it will not be paid back, and I can't get those taxes that I paid on pulling stuff out of that. And we're talking about a couple $100,000 there. So those are where I'm looking at how is this going to affect me and what am I going to do? All right, I don't see any questions coming in. If you would like, I do have the handout. It's last year's 41 pages from Rand Paul. It does not count all the waste that's come up here recently, nor is what's come up recently verified. So you need to take it with a grain of salt. But okay, I don't see anything else coming up. Hey, with that said, guys, have a wonderful evening. We're looking at Micron moving pretty good. We're looking at having protection still on certain positions. We're looking at putting more cash into JEPI. We're looking at getting out of NVIDIA for a profit and moving to leap bull calls like we've been doing on Meta to do a stock replacement strategy, because NVIDIA is just too volatile to be able to time on a consistent manner. So we're looking to be done with NVIDIA as a stock, use the leap bull call, which acts as a money-making point and protection at the same time. All right, no other questions to come in, guys. Appreciate you being with me. Thank you for putting up with me for tonight. I knew this was going to be a touchy subject, but I'm really trying to dig deep to see where companies are going to be growing as a whole. And there's a lot of moving parts in what's affecting those companies. You can't blame it on, there's not one thing to blame it on. There are half a dozen different things to blame it on. And there's so much uncertainty that who knows? Maybe you guys are saying in 30 days our correction will happen. You could be spot on. The 6-monthers are where I originally would have put my vote, but the earnings tell me differently. It's really interesting to work these numbers because we just don't know. So the best thing to do, right? Add protection when you need to, move forward from there, and off we'll go to keep making as much money as we can. No questions coming in. All right, guys. Hey, have a wonderful evening. Thank you for putting up with me tonight. I hope this was interesting for you. I hope this looks at how deep we look into what we're trading and what we're putting your money into. I also hope it shows you the amount of time we spend working those hours to justify positions that we have people in as well. Guys, appreciate you being here. Have a wonderful evening. Look forward to seeing you guys next week. And with that said, take care. Have a good week, and I'll talk to you then. Bye-bye.